Hi guys, it's Stock Curry, and get ready for a very volatile week in the stock market this week. We have a lot of economic news that's going to move the markets, and earnings season kicks off on Friday. I'm going to tell you everything you need to know for this week, so let's get into it. Friday's job report showed that hiring cooled in December and wage growth slowed down as well. All of that points to a cooling labor market in 2023. Now, the jobs numbers on Friday did come in better than expected, and a lot of people thought that because the jobs numbers were coming in better than expected, that would point to the stock market going down. But as I pointed out on Twitter, monthly job creation has been steadily going down, and wage growth only going up 4.6%, which was better than expected. That caused the stock market to rally on Friday. All four major indexes were up over 2% on Friday. The reason the stock market rose so much on Friday is because people feel like as job growth slows down, that is an indication that the Federal Reserve's rate hikes are working and that the Federal Reserve won't have to raise rates as much in the future, because as job growth slows down, that means demand is slowing down, and that should bring down inflation. So all of that is good news from a Fed perspective. However, the strong jobs report does not completely resolve the debate on how the Fed is going to raise rates at their February meeting. Fed officials are keeping their options open for their January 31st to February 1 meeting. The jobs report offered little evidence that the Fed's rapid rate rises last year have significantly slowed hiring. Much like inflation, the Federal Reserve is looking for a significant decline in job growth before they start thinking about slowing down their rate hikes. Futures are currently pricing in a 75% chance of the Fed doing a 25 basis point rate hike in February 1st and a 25% chance of the Fed doing a 50 basis point rate hike on February 1st. Now, there's some economic news coming out later this week that's going to give us some clarity on how much of a rate hike the Fed might do. But I want to remind you that 2023 is not going to be determined by what the Federal Reserve does. 2023 is going to be determined by what earnings do. And this earnings season could be one of the worst ones that we've had in a couple of years here. Wall Street has set a low bar for the corporate earnings season. Analysts expect S&P 500 companies to report their first year-over-year decline in quarterly earnings since the height of the pandemic. Analysts expect earnings to decline by 4.1% in Q4 of last year. Investors are starting to feel that we are headed into a recession. So the Federal Reserve is not going to be the major market mover this year. It's going to be a decline in earnings and an upcoming recession that ultimately bring the stock market down in 2023. And stay on your toes because earnings season kicks off on Friday. Banks will kick off earnings season on Friday with Bank of America, JP Morgan Chase, Citigroup, Wells Fargo, BlackRock, BNY Mellon, and First Republic Bank all reporting on Friday. In addition, we also have United Health Group and Delta reporting. So earnings is going to be the major market mover on Friday. But even before we get to Friday, we have a lot of economic news coming out this week that's going to move the markets in a very volatile way. There are two major inflation reports coming out this week. On Monday, the Federal Reserve Bank of New York releases its December survey of consumers' expectations for inflation, as well as labor market conditions and household finances. Now, this is really important because the Federal Reserve has said over and over again that they're not actually trying to manage inflation. What they're trying to do is manage inflation expectations. And so long as expectations for inflation come down, then the Federal Reserve knows that they are on the right path. And so if the consumer expectations for inflation that come out on Monday show that consumers expect inflation to go down, that would lead a little more credence to the Federal Reserve doing a 25 basis point rate hike on February 1st. Then on Thursday, we get the next major economic news that's going to help us determine how much the Fed might raise interest rates by, and that is the December Consumer Price Index, or CPI. The CPI has been on a decline for the past 2 months in a row. However, it's going to be very important to see if the CPI will continue to fall in December. Now, one thing that we do have to keep in mind on is even if the CPI does fall, Jerome Powell has already said that they might have to raise interest rates more than the market is expecting, because Jerome Powell is concerned that if the market sees some lower inflation reports that we might get on Monday and Thursday, and the market starts rising, Jerome Powell might still have to raise interest rates, because not only is the Federal Reserve trying to cut down inflation through consumer spending, they're also trying to cut down inflation through a rise in the stock market. So if the stock market rises too much or bond yields fall too much, then Jerome Powell said he might have to raise interest rates more than the market is expecting in order to help push down the asset values, so that in turn can help push down inflation. So it's going to be very interesting to see. I have no doubt that if the inflation reports come in lower than expected, the markets will rally, but I don't think that's a guarantee of the Federal Reserve doing a 25 basis point rate hike on February 1st, based upon the comments from Jerome Powell. Now, all of this said, these are the things we need to watch out for this week. What about the rest of this month? Well, throughout this month, the biggest thing that's going to move the markets is going to be earnings. For now, through the end of January, we are in full earnings season, and every single day, the earnings that come out are going to move the markets. And as always, because the market is forward-looking, the actual earnings reports from Q4 are going to be less important than the forward expectations or the forward earnings guidance the companies put out, because the market is going to move based upon that forward earnings guidance, not based upon how these companies performed in Q4. And right now, the stock market has been trading pretty flat for the past 2 weeks. It did break out a little bit to the upside on Friday. We could see a continued rise for the rest of this week through Thursday, but starting Friday, that could all be undone if the forward earnings expectations of these companies come in lower than expected and stocks start to fall once again, because as earnings go down, multiples go up, and so stock prices have to come down as earnings come down. So the entire rest of this month in January, the big focus is going to be on earnings, and that's what you need to watch out for the rest of this month. How well are companies reporting earnings, and what are their forward earnings expectations? Now, unfortunately, I'm not going to be here to give you these up-to-date daily minutes and explain to you guys how the market is moving with each company earnings that come out, because I'm going to be traveling for the next 3 weeks, and I'm going to be without internet access. So I wanted to produce this video for you to give you everything that you needed to know. I will have some videos out on this channel with some great information, including some tax advice, as well as some ways to earn some extra money. And what I have decided to do while I'm traveling and gone, I am bringing some smaller YouTubers onto this channel. I wanted to take this opportunity to highlight some of these smaller YouTubers that have some incredible content. They're very knowledgeable, and I really think they're going to help you out a lot. Just for whatever reason, the YouTube algorithm hasn't quite picked them up yet. So I'm going to take this opportunity to highlight them and hopefully give you some incredible information that we don't normally talk about on this channel. And then also, hopefully, we can get them some subscribers and get their channel view counts up as well. So that's all going to be coming out over the next 3 weeks while I'm traveling. I hope this video helped you out. If you got a lot out of this video, then be a good friend and share this video with your friends and family. Also, don't forget to hit the like button and subscribe. And if you want to know what stocks we bought in the Millionaire Club Challenge portfolio on Friday, make sure you watch the last video that I uploaded here.